So, what if one of these sharpest minds on Wall Street told you a massive bull run is coming, but there's a huge trap hidden inside? Well, that's exactly what we're digging into today. We're breaking down Tom Lee's 2026 forecast, and you're going to want to hear this because it's got an opportunity and a major risk. Okay, first up, the number that's got everyone talking, 7,700. That's Tom Lee's target for the S&P 500. Now just think about that. That is a huge jump from where we are now. Super bullish, right? And this is a big but. That's only half the story. Because hiding inside that big, shiny number is a really critical warning. If you only look at that 7,700 target, you are completely missing the trap. And it's something every single one of us needs to be prepared for. All right, so let's get into the catch. This is where we move past the headline and into the actual strategy. And this quote from Tom Lee himself, wow, it just says it all. Compressed in 1 year will be joy, depression, and rally. I mean, think about that. He's basically forecasting a year of insane volatility. We're talking whiplash, massive highs, gut-wrenching lows, and a big recovery all packed into just 1 year. So yeah, buckle up. And that depression part, he's not just being dramatic, he's putting a number on it. We're talking a drop of 15 to 20%. Now that is not your average dip. That's a serious correction, the kind that feels a lot like a bear market. It's the kind of drop that causes panic and makes people sell everything. But here's the key, and this is so important. This is not a signal to run for the hills. It's the exact opposite. This whole correction is being framed as a massive buying opportunity for investors who are actually prepared for it. You know, the ones who have that dry powder, that cash on the sidelines, ready to jump in when everyone else is freaking out. Okay, so you're probably wondering, how can you have both a huge new market high and a massive drop in the same year? Let's look at what's actually driving this forecast. So a big piece of the puzzle is this thing called multiple compression. It sounds complicated, but the idea is actually pretty simple. It just means that company earnings are expected to grow faster than their stock prices. So even as the market goes up, stocks are technically getting cheaper and more sustainable. It means the rally is built on real profits, not just hype. That's a super healthy sign. And the second big driver, a broadening rally. Look, we've all seen it, right? A handful of mega-cap tech stocks, the Mag 7 and AI names, have been doing all the heavy lifting. Well, the idea here is that the party is about to get bigger. Other parts of the market are finally set to catch up. Specifically, we're talking about sectors like financials, energy, and small caps. These are the groups that have been lagging behind. If they start to participate, that's a huge sign of a healthy, sustainable bull market, not just a concentrated one. And it's not just about stocks. Tom Lee also makes another really bold call, this time on Bitcoin. He's looking at a potential moonshot here, driven by more and more big institutions getting into the game. But listen, with that kind of crazy upside comes, well, crazy volatility. So the advice here is super clear. Think of it as a long-term hold, like 10 years plus. Keep your positions small, maybe 2 to 5% of your portfolio, and you absolutely have to be ready for a wild ride. This is definitely not a get-rich-quick scheme. Hey, by the way, if you're getting some real value out of this breakdown and it's helping you see things more clearly, do me a quick favor and hit that like button. And make sure you're subscribed to Stock Market Mojo, because we're always breaking down what you need to know. All right, so let's put all of this together, because it leads to what might be the single most important takeaway for how you should be thinking about investing from here on out. So what's the bottom line? It's this. The easy mode of investing is over. You know that time from 2023 to 2025 where you could basically buy any hot tech stock and make money? Yeah, those days are likely done. We are officially entering hard mode. And in hard mode, the old rules don't apply. Just chasing hype and noise isn't going to work anymore. Success is going to come from understanding fundamentals, doing your homework, and having a real strategy. It's about making smart, educated choices, not just following the crowd. So the big question is, how do you actually win in this new hard mode environment? Let's lay out a clear action plan. Okay, here are 4 simple steps to navigate hard mode. Number 1, prepare, don't predict. Have a plan, don't just guess. Number 2, automate your investing with dollar cost averaging. Just consistently invest, whether the market's up or down. It's a powerful tool. 3, keep an eye out for that broadening rally we talked about. It's your green flag for market health. And number 4, and maybe the most important, stay calm and focused. When that correction hits, don't panic. Remember, it's the opportunity. So let's go back to our original question. Is 2026 an investor's trap or the ultimate opportunity? And the answer is, it's both. It's a trap for anyone who isn't paying attention. But for you, for the prepared investor, that drop isn't something to fear. It's the setup. It's the ultimate opportunity to get in before the next big move higher. To make sure you stay ahead of these market shifts and are always ready for what's next, be sure you're subscribed to the Stock Market Mojo channel. We'll keep bringing you these clear, simple breakdowns to help you navigate it all.